Mayuresh, of course, if LNT starts speaking, we'll have to cut across. But while we wait for that, let's talk about your thoughts. Let's talk about Subros or the auto space, for example. You just heard them speak about this. Suzuki, they'll supply additional air conditioning units. I don't know if you have Subros under your coverage, but I'm certain you have Maruti under your coverage, or Suzuki, and that's an additional 1,80,000 to 2,40,000 units that they expected the Gujarat plant to. What are your thoughts here?
Afternoon, Neeraj. Again, Subros was one of our top picks in FY16, and largely again I think the dependency of Subros and other auto ancillary players depend on how Maruti's volumes grow. Looking at the trend in terms of how Maruti's volumes have grown for 14 to 16, they have been at a very tepid pace, but with the new launches that have taken place and expectations of higher single-digit, double-digit volume growth happening for Maruti over the next couple of years, a few launches doing exceptionally well. Brezza, Baleno have been performing exceptionally well, and again I think the pipeline, the waiting pipeline is still pretty large, 4 to 5 months. The other models have been doing well. So I think if Subros and the other auto ancillary makers who cater to OEMs like Maruti, I think if Maruti is expected to do well, correspondingly I think the business should flow through as the management was indicating. So largely again I think in terms of top line growth, I think the top line should remain extremely robust in terms of new models being supplied into the market and Subros probably catering to those models. Margins should probably hold up, because in a situation where input cost inflation is going higher, if you've got the pricing power benefit with you, specifically in terms of what Maruti as an OEM has, I think it does not trickle down in terms of catching distributors by their neck or auto ancillary companies by their necks or squeezing their margins. So I do not anticipate that probably happening through and a pass-through happening on that front. So I think stable numbers should be reported by Subros and auto ancillary companies catering specifically to Maruti.
Aside of that, Mayuresh, the one big sulker today's BOB, while there's no taking away from the fact as to how weak the earnings have been in this quarter, but as investors, do you think the worst is perhaps behind us, and from next quarter, can we see an improvement in the earnings trickle in? And by that logic, is BOB a buy right now?
Afternoon, Aisha. Again, I think the numbers were disappointing, but again, one must really understand that you are probably going through a very patchy phase at this point of time. Q3 is where the demonetization effect hit the hardest for bankers. Q4 might again be a carry forward of what we probably saw in Q3. So I think loan growth was something which was languishing for most of the players within the BFSI space. And again, I think the data which suggests credit growth languishing in middle single digits, that needs to pick up significantly. Now again, if credit growth picks up by the first half of FY18 as the end user industry's working capital constraints start going down, with whatever reform processes started playing out, whether that be steel, metals, which one has the highest exposure in terms of the banking space, real estate expected to normalize over the next few quarters, gems and jewelry as well. So to that extent, I think a lot of the stress specifically from these sectors should start coming down. As credit costs have got elevated for the banking sector as a whole for the better part of this year, both in terms of provisioning that has taken place and the additional provisioning that the bankers were expected to in terms of elevated watch lists, that should start probably coming down by the first half of FY18, and once that starts normalizing, that trickle down effect in terms of lower credit cost, lower provisioning should start playing out on the return ratios. So combination of these factors, improvement in credit growth to probably higher double digits from the mid single digits that we're probably witnessing at this point of time, as well as the elevated asset pressure coming down and credit cost probably expected to go down, should start playing out on balance sheets. Capital adequacy probably in terms of BOB, SBA or the larger PSU banks is very, very robust, as well as their distribution model in terms of retail advances. So it's a matter of time over the next few quarters as growth starts picking up. The valuations, in my opinion, in the next few weeks or in quarter 4 should largely bottom out. So I think I remain optimistic on larger PSU banks, but again I think one really needs to time their entry properly over the next few weeks. But FY18, FY19 should be relatively better quarters compared to 16, 17.
Right. Mayuresh, what's the view then out there on Infi and the developments within the board members now? While it seems like things are simmering down, so to speak, at least with, Narayana Murthy's latest commentary. But what is it that you're telling investors who have holdings or positions built into Infy. How should they be approaching the stock now?
Now again, I think one will have greater clarity, Aisha, in the evening press conference that has been called for. And again, I think the feud that is probably going on in terms of whatever has been raised, perceived to be corporate governance issues related to sovereign packages and so on and so forth, I think we'll get further clarity. Having said that, probably I think the entire sector, included Infosys, probably has a lot of headwinds at this point of time. The H1B visa still appears to be a huge overhang onto these stocks. What happens effectively in terms of utilization levels, ex-trainees, and how that picks up with attrition probably still remaining elevated for most of these companies. What happens in terms of customer discretionary spending, specifically in the context of Trump policies and whatever we will witness in terms of Brexit. I think that will be very, very interesting to see. Tailwinds very, very few at this point of time. A depreciating currency can probably aid margins in a certain way. But again, I think the earnings will depend upon a lot of factors, as I mentioned above, in terms of how spending takes place and how largely EBIT margins probably happen and how utilization levels start panning out. Again, valuations are extremely attractive for most large cap IT players. Infosys around 13.5, 14 times at current valuations on FY18 basis seems very, very attractively priced. But largely, again, I think let's wait for clarity to come through in terms of what the management has to say. And the headwinds clearly are outweighing the tailwinds, at least at this point of time, for the entire sector.
Okay, Mayuresh, great speaking with you, and thanks much for sharing your views on markets as well as individual stocks.
Thank you so much.
Okay, that's the view coming in from the House of Angel Broking, but lots more earnings. So let's